Patience is the ultimate silent weapon in trading, a skill often undervalued but far more decisive than any chart pattern or complex indicator. The majority of traders fail, not because their technical analysis is flawed, but because they cannot resist the urge to act when absolute stillness is required. They are driven by boredom, fear, or a desperate greed to enter trades prematurely, exit them too soon, or simply overtrade their accounts. A relentless lack of restraint that slowly consumes their capital and their career. Trading utterly inverts the rules of the professional world. In most jobs, action is rewarded. You are paid for activity, for hours clocked, for deals closed. Productivity is synonymous with output. But the market is a cruel master to this mindset. It punishes the need to be constantly busy. You are not rewarded for activity here. You are rewarded for waiting until the odds are crushingly in your favor, and then executing with surgical precision. The less you trade, the more you allow patience to filter out the noise, the better your long-term results will be. This truth is deeply difficult for human psychology to accept. We are wired to avoid uncertainty. Doing nothing feels like surrendering control. A trader staring at a static screen for hours feels a primal restlessness. The mind becomes a traitor, whispering, "Just take this setup. Things will move. This one could be the big win." That voice is not logic. It is impatience disguised as opportunity. Listen to it repeatedly, and it will systematically dismantle your account. You must redefine patience. It is not passive idleness. True patience is active discipline. It is the intense, constant engagement of observation, the meticulous analysis of setups, and the conscious decision to reject mediocre opportunities so that you are fully prepared for the exceptional ones. The patient trader is not lazy. They are highly strategic. They understand that in this game, stillness is often the most profitable decision. The market spends the majority of its time churning in messy, low-probability noise. High-probability setups, the clear trends and clean breakouts, are rare. Forcing trades into the noise is playing in the mud, where commissions and unpredictable action bleed your capital. The patient trader recognizes that capital is a stored weapon. Wasting it on every small fluctuation dulls its edge and weakens the ability to strike when the real opportunity appears. One of the greatest psychological challenges is the illusion of missed opportunity, the sting of regret when a move happens without you. This is the seed of FOMO. But you must realize there are no missed opportunities, only trades that were not part of your plan. If a move was not your clean setup, missing it is not a loss. It is a victory of discipline. The market is infinite. Your capital is finite. The patient trader lets others chase impulsive moves, knowing that another clean, high-quality setup is always coming. History confirms this. Warren Buffett famously observed, "The stock market is a device for transferring money from the impatient to the patient." His method involves ignoring the relentless hype and sitting on cash for years, waiting for what he calls the fat pitch, rare opportunities where the probability of success is overwhelming. On a tactical level, professional day traders may sit for hours without a single click, not out of idleness, but to conserve the emotional energy and financial capital necessary to act swiftly and decisively when their perfect edge appears. The amateur has already exhausted their focus on 5 low-quality, anxiety-fueled trades. Patience is also the most potent defense against revenge trading. When a loss inevitably hits, the urge to jump back in and win it back is overwhelming, leading to a disastrous spiral of compounded losses. The patient trader accepts the loss, steps back, and waits for a new, valid setup to emerge, breaking the emotional cycle. Patience, in this way, is about waiting out your own toxic emotions. It compounds profits by naturally filtering out low-quality losses, increasing your average win rate through better selection, and granting you the staying power to capitalize on the rare, needle-moving opportunities. The impatient trader burns through their ammunition before the real battle even begins. Mastery of patience is not easily earned. It requires training your mind to override biological impulses, to sit with discomfort when every instinct screams for action. It is a constant reminder that trading is a marathon, not a sprint. Developing this restraint is like building muscle. One slip of discipline can undo weeks of progress. The irony is profound. Traders spend years searching for the perfect external system when the real solution is internal. They don't need another tool. They need the ability to sit calmly while the market does nothing, transforming their chaotic gamble into a structured, focused business. The true psychology of patience is the understanding that waiting is not weakness, but power. Every time you choose not to take a bad trade, you strengthen your self-discipline and secure your long-term survival. Ultimately, patience is the highest form of trust. Trust in your edge, trust in your process, and trust in the undeniable fact that opportunities will always return. While everyone else exhausts themselves chasing scraps, you sit quietly, preserving your energy, waiting for the perfect strike, the one that changes everything. Trading is as much defined by what you don't do as what you do. Impatience is the hidden cost that disguises itself as productivity, mistaking movement for progress. The market rewards precision, not activity. The impatient mind rushes in too early, chasing the price and converting a good setup into a loss by failing to wait for confirmation. This leads to overtrading, where trades are invented out of sheer boredom just to feel engaged. These boredom-driven positions are almost always low probability and slowly, insidiously erode capital. Impatience creates emotional exhaustion. The constant cycle of impulsive entries, panic, and regret drains mental energy, making disciplined thought impossible. This fatigue fuels a vicious loop where mistakes breed more impatience. Financially, the cost is staggering. A patient trader risks a small, controlled amount on a few high-quality trades. An impatient trader exposes 4 times the capital on dozens of low-quality gambles, ensuring the losses from bad setups eventually outweigh the scattered wins. The difference is not intelligence, but patience. The psychological cost is self-doubt. Every time the trader enters a bad trade, they question their system and their future. This self-doubt leads to the destructive habit of system hopping, chasing the next indicator or shortcut. Failing to realize the missing piece was the discipline to wait. Impatience blinds them to the bigger picture. They treat each trade as if it must be the one big win, sabotaging their long-term success by focusing too intently on the immediate. True patience is active discipline. It is the courage to deliberately ignore bad setups and the iron will to resist the urge to chase. The patient trader knows that missing a trade is not a loss. Entering a bad trade is the real loss. Think of a skilled fisherman who studies the water, waits for the right moment, and casts with precision. The impatient fisherman thrashes wildly, exhausts himself, and catches nothing. The market rewards those who wait. As Jesse Livermore, one of history's greatest, said, "It was never my thinking that made the big money for me. It was always my sitting." The challenge is that impatience feels natural because our brains are wired for the dopamine rush of action. Patience, conversely, feels boring. But in trading, boredom is a sign you're doing it right. True excitement comes from watching your patient, calculated plan unfold, not from chasing random noise. To master this, you must accept that doing nothing is often the smartest move. Impatience is expensive. The market will always collect its fee, either in money, discipline, or confidence. Patience is a profit strategy. Each avoided bad trade preserves capital for the moment the perfect trade appears. The best trades often follow long periods of stillness. Markets move in waves. The consolidation and sideways motion test the trader's resolve the most. The one who can endure the stillness, preserving their emotional and financial capital, is the one who is fresh, focused, and prepared when the real move finally comes. The impatient are already drained. Furthermore, The waiting game demands emotional control. The mind abhors uncertainty. The anxiety of waiting pushes the novice to act prematurely, just to alleviate the discomfort. Elite traders are separated from the average not by technical knowledge, but by their ability to wait. Even the best strategy will fail in the hands of someone who cannot wait for its high-probability signals. Waiting teaches humility. It forces acceptance that you cannot dictate when opportunities appear. You can only wait for the conditions to align. This surrender to the market's pace is liberating. It allows you to stop fighting and start flowing with the market. The discipline of waiting grants clarity. Rush traders zoom in on small time frames, blinded by noise. Patient traders zoom out, seeing the forest instead of obsessing over each tree. This perspective is the ultimate edge. They conserve emotional energy, remaining sharp and focused for the one or two trades that truly matter. As one seasoned veteran put it, he takes maybe 3, sometimes none. His success is based on quality, not quantity. The waiting game is the hardest of all. It pits you against your primal, action-oriented instincts. Sometimes, the most profitable action is to do absolutely nothing. This is discipline in its purest form, the ability to sit on your hands and refuse to click until everything aligns. In a world that rewards constant motion, trading flips the system. More trades do not equal more money. They often equal more losses. The discipline of doing nothing is not laziness. It is the strategic preservation of capital. Cash is a position. Every unnecessary trade shrinks your ammunition. Doing nothing protects your mind from emotional exhaustion. Imagine a sniper. He doesn't fire at every flicker, but spends hours setting up, focusing, waiting until the target is perfect. Then one shot. A trader must think the same way. Doing nothing is part of the aim. The real challenge is battling the psychological triggers. If you have to convince yourself to take a trade, it is the wrong trade. The best setups scream at you. Anything else is noise. Boredom is often more destructive than greed or fear, driving traders to seek stimulation by clicking the button. The patient trader embraces this boredom as a signal that they are in control. Doing nothing often requires more strength than taking action. Closing the platform and walking away is harder than clicking buy. Resisting temptation requires consistent willpower. It's like dieting. Indulging is easy. Resistance builds the long-term success. Professional traders look calm because they have trained themselves to be comfortable with stillness. They choose only the battles worth fighting. The discipline of doing nothing is ultimately about trust. Trust in your system, trust in your rules, and trust in the certainty that the market will always produce another opportunity. Missing bad trades is as vital as catching good ones. Doing nothing is not passive. It is the highest form of active discipline. The market doesn't care about your schedule. This indifference leads many to the trap of forcing trades, entering when the setup is clearly not there because they feel they have to trade. This is the opposite of patience and the enemy of discipline. Every forced trade is a crack in your foundation. It's gambling, which the market is designed to punish. You lose money, but more dangerously, you lose self-trust because you have proven you don't follow your own rules. This leads to hesitation on the right setups and a destructive cycle of chasing losses. The desire to force trades stems from our brain's wiring for instant gratification and its hatred of uncertainty. The market, which is slow and requires waiting, contradicts this. Forcing a trade gives the illusion of control while actually taking it away. Even a winning forced trade is dangerous, as it rewards bad behavior and convinces you that bending the rules works, until the inevitable, account-wiping loss occurs. To escape, redefine success. Stop measuring it by daily profit. Measure it by daily discipline. Did you follow your plan? Did you preserve your capital? If yes, you succeeded. View not trading as active work, protecting your capital and discipline. You don't lose money by missing a move. You only lose money when you click. The market will always create another opportunity. Patience ensures you have the capital and clarity to take it when it comes. The market pays the patient. This simple phrase holds the truth that separates success from burnout. The market rewards the one who can sit through the silence, the boredom, and the temptation until the perfect moment arrives. Waiting is not passive. Waiting is intentional. It's like the lion in the grass, still but coiled for explosive speed. The difference between a struggling trader and a successful one is not intelligence. It is patience. The waiting game is hard because it pits you against your instincts. The silent stretches are where the game is won or lost. Waiting gives your trades meaning and conviction. It filters out noise and teaches humility. It conserves your emotional energy. The legends are remembered not just for the trades they took, but for the ones they didn't take. Patience is the quiet, invisible discipline that builds wealth over time without drama. When the market goes silent, when boredom and fear whisper in your ear, will you wait? Patience is your ultimate edge. It is the invisible force that keeps you alive long enough to succeed. The final question is not how smart you are, but how long you are willing to wait.